Hey guys, Jerry Green from Forex Trading, and today we're going to be doing another video directed to beginners on lot sizing. Now, lot sizing is just simply put, it has to do with the amount of units per currency that you're interested in buying or selling. Now, lot size is the same thing as position size, and if you're trading futures, it has to do with contract. So, take for example, I'm interested in placing a trade, and I know what I am doing in the market. I come to new order and I click on it. There is a part where it's obvious. It has to do with the unit or trade or currency. This is what is regarded on this platform as volume. So your lot size has to do with the number or the amount of units you want to buy or sell, depending on the direction of the trade you want to take. So when placing a lot size, it is important to understand that lot size has to do with a lot. It is the bedrock of risk management. The fact that you know how to place a trade or how to trade or you have a super strategy that can make you profit does not mean that you just go in there using any or large lot sizes. Lot size is dependent on the stop loss you're using and dependent on the account size that you're also using. So take for example, you're using a $10,000 account and then your stop loss. And your stop loss has to do with market structure or the currency pair you're trading. So depends on how volatile the market is or how smooth the market condition is that you set your stop losses. And your stop loss determines the volume of the trade you take. Now, how do I calculate my lot size? It depends on the account size. Now, I have an account size that is $10,000. My stop loss then, first of all, it depends on the account size and then it depends on the stop loss. And then it also depends on the market condition for you to decide, okay, how far would my stop losses be or how close would my stop losses be? If, for example, based on a strategy, I'm just randomly going to put this out there for example purposes. Based on the strategy I trade, I believe the market will move higher from where we currently are into a predetermined target, but then I believe the market will move higher. And based on structure or based on this current market I'm using, it's the pound dollar. And based on the pound dollar, I believe that the market will move higher and the stop loss will be below, the stop loss will be below this low here. So from where I stand, I'm going to set my stop loss for like 20 pips. So now I've determined my stop loss 20 pips from my entry. Then I'm going to now move to my position size calculator. For the math geeks, you could just move to babypips.com. We have a position size calculator. So to calculate your lot size, just Google position size calculator. One of the simplest is from Baby Pips, and that's the one I use. So just move to position size calculator on Baby Pips. So now to calculate your lot size properly, now you know that my stop loss is 20 pips. Move to position size calculator on Baby Pips. It's one of the simplest position size calculator. That's the one I use. Scroll downward and then you now know your stop loss is 20 pips. Your account size is, let's say, $10,000. That's the demo that comes with the demo account size that comes with Baby Pips. $10,000 and I'm risking 20 pips per trade. And also you need to know the percentage risk per trade. I'm interested in risking just 1% of my account size. So risk percentage, 1% of my account size. The stop loss is 20 pips. See how simple it is? The stop loss is 20 pips and I'm risking just 1% of my account. So how do I know what lot size to use? Now, the currency pair I'm actually placing a trade on is pound dollar. If you switch it to pound dollar, you'll be asked to put the recent price. The difference is not too much because it wants to calculate the value per pip, but the difference isn't too much. So I'm just going to use the euro dollar here. So calculate, and that's it. And pay attention to standard lots. This means that the lot size I'll be using should be 0.5. Risking 1% of my account with a stop loss of 20 pips, the standard lot I'll be using would be 0.5. Now, when price hits my SL, I'll be risking just $100, which is equivalent to 1% of $10,000. It's quite simple. It's quite clear. It's easy to understand. So let me just place an example. Back to equity. new order. Now come to volume. Now be using 0.5 as calculated. So I've placed my trade. So remember to set your stop loss, remember to set your take profit, and your stop loss has to be 20 pips as already determined and as calculated through the lot position size calculator. You must understand that the essence or the importance of calculating your lot size before placing a trade is paramount, as you would never have the opportunity to last or stay in the long term if you do not understand how to calculate your lot size along with your risks, along with your percentage per trade. It is paramount you understand that every trade I place, every trade I'm risking is exposing me to a certain percentage of my account. And my risk appetite allows me to reach 1% or even 0.5% of my current balance. Therefore, when price retraces and goes straight to my stop loss, I'm only allowing this trade, or I'm only allowing the markets to take 1%, 0.5%, or 2%, depending again on your risk appetite. But for conservative purposes, do not risk more than 1% per trade, and let all your open positions not risk more than 3% of your entire open positions. So let's say I'm interested in risking 0.5% of my account. Calculate. This is simple. Now, let's calculate it, and this is 0.25 standard lot. Where I showed you volume earlier, I just go there and switch it from 0.5 to 0.25, place the trade, set my stop loss, 20 pips for my entry. When price hits it, I exit with $50, and that's 0.5%. So you see, your stop loss, your lot sizes are not random. That is why there are websites like this that makes it easy for you to just come here and calculate it. So they are not random. You need to understand that calculating your lot size is important, as every open position exposes you to a certain percentage drawdown of your trade. And this is what keeps you in the game for the long term. If you do not understand how to calculate lot size and you're just haphazard with your approach, you will not last. And then if you cannot last in the market, you won't be here for the long term. And the aim is not just to make profit. The aim is to be here in the long term, build a career that actually makes sense. And understanding how to calculate your lot size is paramount, is one of the bedrocks to risk management. So with that, I'll see you in the next video. Cheers. Do well to sign up with our trading partner, EQ Markets Global, and trade with our trading partner if you're a beginner. We'll leave a link in the description below. If you like this video, hit the thumbs up button. If you're new, subscribe for more videos like this. Cheers. See you in the next video. Wish you good luck and good trading.